Well, good morning and good evening, everyone. Welcome to our distinguished guests, the Canadian Chamber of Commerce, and friends and colleagues. It's an honor to join you here today for this important gathering. I'm also delighted to be here because I am a proud Canadian. For those of you who remember the Molson I Am Canadian ad, in Canada, we are proud to be the second largest landmass, the first nation of hockey, woo! And we like to think the best part of North America. Yes, we're a country of deep lakes and calm mountains, but we also have grit. At the Four Nations hockey game last year, against our southern neighbor, there were 3 fights in the first 9 seconds of the game. What a start to the game, and Canada won the tournament. Woo! I happen to be a die-hard fan of the Tragically Hip. I love maple syrup on everything. And I'm very proud to wear my love of Canada on my sleeve, or should I say, my onesie. And I do wear that every Canada Day. I had the privilege of becoming Manulife's Asia CEO 7 months ago, at which point my wife and I moved to Hong Kong, and I can tell you we love it here. We love the people, we love the food, we love the city, but I do still occasionally miss a good plate of poutine from time to time. So with that in mind, I'm very happy to have the opportunity to address all of you this morning in one of CanCham's most significant markets. Today's theme of fostering new Trans-Pacific investment opportunities could not be more timely as companies seek new avenues for growth in a more unpredictable world. Last November, our own Prime Minister Mark Carney wrote in The Economist that we're living in now what he calls an age of variable geometry. This means a time characterized by dynamic, overlapping, pragmatic coalitions built around shared interests and occasionally shared values, rather than shared institutions. It's more important than ever for companies as well as governments to seek new markets that are open and welcoming to new business partners. I like to think that the Pacific is not an ocean that divides, but a bridge that connects. Trade and investment between Canada and Asia have fueled growth, innovation, and prosperity for decades, and there is a lot more potential that we can all tap. For Manulife, a company with proud roots in Canada, as well as a deep presence across Asia, dating back to 1897, it's more than just an idea for us. This is the very blueprint of our success. We saw the value of diversification a long time ago, and it's fueled our success today, and it will in the future looking forward. Discussing this topic here in Hong Kong is particularly appropriate, given the city has maintained its role as a vital crossroads for businesses across the world thanks to its commercial mindedness. It's fueled by energy, adaptability, inclusiveness, and enduring resilience. These qualities are precisely why Manulife chose Hong Kong as our regional headquarters, driving growth and leveraging Asia's talent and capabilities to drive that growth. These qualities are precisely why Hong Kong remains a thriving business hub and now home to our regional office. And it's important to note that success here also means success for Canada as a whole. With Canadian companies' international presence helping bring economic benefits back to the home country. Today, I want to share my perspective on the significant opportunities we see for companies that can open the door to a new era of collaboration and mutual growth. Let's begin with Hong Kong's enduring position enduring position, a hub for regional businesses, and as a connector for innovation, talent, and more. Manulife has operated in Hong Kong for 125 years, and we're proud to count 1 in 3 people in Hong Kong as our customer. Hong Kong also plays a pivotal role for growth across the region as we focus on accelerating Asia's contribution to Manulife's core earnings to 50% by 2027. That's right, half of Manulife Group core earnings will come from Asia by next year. And Hong Kong represents the single largest contributor to the Asia region. The factors that brought Manulife to Hong Kong so many years ago remain true today. A unique combination of talent, innovation, a robust regulatory framework, and unparalleled access as a gateway to China and to the region as a whole. It makes it the ideal platform for Canadian firms seeking new growth avenues to navigate an increasingly complicated world. Over the years, we have in turn supported the city's continued economic growth by providing long-term patient capital through certain key investments. This includes the Sustainable Bond Program that supports the city as a green finance hub, as well as up to 40-year financing for the development of the third runway at Hong Kong International Airport. Our globally diversified equity portfolio also provides growth capital to growing Chinese companies. As a home for our regional headquarters, Hong Kong's new redomiciliation regime has been designed to attract businesses to redomicile here, offering a strategic and compliant gateway to future growth. In fact, Manulife Hong Kong was the first insurer to redomicile to Hong Kong last year, first one in the market. We're grateful to Christopher Hui, Secretary for Financial Services in the Treasury of the Hong Kong SAR government, and his team, including the Hong Kong Insurance Authority, for their support throughout the process. The move really underscores the sophistication of the Hong Kong regulatory environment and our strong confidence in its future. The city also remains a springboard for our wider Asia growth. We now deliver strong performance across 14 markets in the region, and soon to add one more with our venture in insurance in India, which we announced recently. As I mentioned, this growth doesn't just drive our business here in Asia. It also has a significant impact on our performance globally. As a Canadian company, we're very proud of the results we've been able to deliver here for our stakeholders with a lot of optimism for the future. Second, closely related is Hong Kong's incredible resilience as a global financial and insurance center, a tremendous opportunity for Canadian companies in those sectors. As a mature insurance market, the city recorded 635 billion Hong Kong dollars in life insurance premiums in 2024 and has strong insurance penetration at 17%. This shows the depth and sophistication of Hong Kong's insurance sector, a center of excellence for the Greater Bay Area and for the region as a whole. In particular, the Stock Connect, Bond Connect, and Wealth Management Connect schemes have significantly streamlined cross-border investment, enabling Chinese mainland investors to access the financial markets in Hong Kong. Meanwhile, the Hong Kong SAR government has supported the city's growing profile as a leading wealth hub, with over 2,700 family offices now here in the city. That's why Manulife has centered our global high net worth business here in Asia, leveraging our 20+ years of experience and our footprint across Hong Kong, Singapore, and Bermuda to better meet the global needs of high net worth customers in this vitally important region. Building on this momentum, this city is expected to become the world's leading cross-border wealth management center within the next 2 to 3 years. This makes it an increasingly vital hub, meeting the needs of globally mobile high net worth customers as they prepare to transfer wealth to the next generation. Third are the opportunities we see across a major demographic transition. as societies across Asia grow older. Manulife's own Asia Care survey showed that aging populations are now redefining longevity, focusing on quality of life and independence, meaning it's not about adding more years to life, but adding life to those years. Hong Kong is at the forefront of this demographic shift. It boasts one of the longest life expectancies in the world, and by 2030, approximately 25% of the population in Hong Kong will be over the age of 65. However, as we know, longer lives don't necessarily mean healthier ones. With the increase in medical costs expected to remain high in Hong Kong at roughly 10% this year, societies are facing a heavy burden as a high proportion of these costs are indeed out of pocket. As a result, holistic solutions that cover both health, wealth, and retirement are increasingly needed to ensure adequate protection for people in the future. As a global leader in life insurance, asset management, and retirement planning, Manulife supports customers at every stage of their life. We've tapped this opportunity to scale our expertise to help people live even longer but more purposeful lives. We've invested heavily in supporting customers across the health journey, from prevention to diagnosis to care, as well as savings and retirement. And Hong Kong serves as a template for Manulife across our other markets and across the region that are navigating some of these same changes and challenges. It also serves as a reference point for how societies can engage the private sector to address the challenges of an aging population. It's universal. Offering valuable lessons for governments worldwide that are grappling with these issues. And to me, it's that the private sector clearly has an important role to play to augment these important foundational public systems. The fourth opportunity arises from the continuing integration between Hong Kong and the Greater Bay Area, which is an economic powerhouse. 87 million people with a combined GDP of almost $2 trillion US. Hong Kong plays a vital role as a gateway to this thriving ecosystem, facilitating new ways of thinking about health, wealth, and retirement. For example, GBA integration is presenting fresh opportunities to support cross-border healthcare needs. In fact, close to 100,000 Hong Kongers aged 65 or above reside in Guangdong province. That's as of mid-last year, a 40% increase over the last decade. Manulife's deep presence in the GBA positions us to meet the needs of this diverse and growing population. To address health challenges, we've continued to expand our cross-border network. It enhances access to affordable and quality care for what it seems to be an increasingly mobile population across the GBA region. For Canadian businesses operating in or considering operating in Asia, the GBA definitely offers an exciting opportunity for innovation and for growth. Finally, infrastructure and ESG investing, they're defining challenges and opportunities. And Canadian companies are very well positioned to thrive here. At Manulife, we're proud custodians of an asset portfolio of approximately 450 billion Canadian dollars, backing our customer accounts and our shareholder accounts. And it includes material investments in infrastructure, real estate, and ESG assets across the world. From clean energy projects in Vietnam and Indonesia to sustainable transportation corridors, we align our investments with the imperatives of sustainable growth. Our portfolio also includes project bonds such as Henan Railway in China, Changi Airport in Singapore, and major Australian energy and transport assets. It clearly demonstrates the breadth of opportunities for Canadian investors across the region. Canada's strengths in green technology and financial services align well with Asia's infrastructure demands. The region, particularly in China, is also a major driver of innovation in sustainable energy. This creates fertile ground for partnerships that can lead the charge in green innovation and create more resilient and inclusive economies. Manulife's long-standing expertise in sustainable investing is a key opportunity that we will continue to focus on. These 5 opportunities I've talked about are enablers for growth, but I want to talk about one more important enabler for growth, and that's talent. With 14,000 employees across the region at Manulife, it's a top priority for Manulife's business and a subject I personally spend a lot of time focusing on. And Hong Kong remains a global talent hub, thanks to the city's strategic position as an international financial center and its role as a gateway to the Chinese mainland. Government initiatives, including the Top Talent Pass Scheme and Quality Migrant Admission Scheme, have attracted high-quality talent from across the globe. At Manulife, we've been able to leverage this amazing talent in our Hong Kong regional office to build our capabilities in the region, spread best practices, and importantly, to drive growth. Companies also have to invest in their talent, equipping them with training and technologies to enhance their professional skills and enable a future-ready workforce. At Manulife, we've invested heavily in AI, being named the #1 life insurance company for, the #1 life insurance company for AI maturity by Evident, a global leader in benchmarking AI maturity across financial services. Over 75% of our global workforce is engaged with Gen AI tools. And we're also unlocking capabilities to help our agents advise our customers both more effectively and more efficiently. By moving beyond isolated use cases and embedding AI across the business, we can raise the bar and create greater value for our stakeholders. I spoke earlier about this age of variable geometry that we're all living in, and as the established order is indeed upended, to me, collaboration is no longer optional. It is going to be critical for our future success. The opportunities before us all require bold thinking, strategic investments, and to me, above all, a shared vision of what's possible when companies across Canada and Asia work together. From longevity to clean energy, from AI innovation to delivering better customer outcomes, the paths for partnership are as diverse as they are exciting. Hong Kong remains a vital connector for Canadian companies looking to seize these opportunities. Manulife's own experience here shows what we can achieve when we leverage the city's strengths to chart new paths for growth. So we invite you all to join us in building a brighter, more connected future. Together, we can ensure that the Trans-Pacific Corridor continues to be a driver of economic diversification, innovation, and importantly, growth for Canadian companies for many years to come. Thank you and have a great conference.